Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week, and hopefully lots of great ideas and opportunities for you throughout the show. Well, stock market continuing its upward move really worldwide as the buyers pick up where they left off in 2016. Of course, a little stalling at the end of the year, but then we saw the market buyers come back. Really, the only market to lose ground of the major markets in the world was Mexico, as Donald Trump has got his eyes squarely on that country when it talks about importing from there and, of course, building the wall. GM warned about bringing cars from there, and Ford actually had canceled a factory, $1.6 billion factory there, and keep 700 jobs here in the United States. U.S. stocks taken, we're going to call this a little more random nature on the upside as we get to the new year. The markets normally, we're going to call this not only random, but maybe a little bit signs of becoming unhealthy. Normally when markets rotate on the way up, one group stalls, another one takes over. We've seen actually the Russell get a lot weaker, and we've seen some pretty big breaks in the retail stocks. So we're going to say that there's some cracks showing right now, even though in this shifting leadership that we're seeing, the NASDAQ, which were laggards and now coming on late, they're putting on a really good show here the last couple days as they start to lead and really in a catch-up phase because they have been really holding back. China acted decisively to keep the yen from falling any further, and by increasing the amount of money it takes to borrow yen, and that seemed to also change a lot of the money flows that we've seen, as that seems to have helped stocks, especially the tech stocks. S&P 500 up about 1.5% for the week. Dow Jones and the Russell both fractional gains, and the NASDAQ really flying up about 3%. Now the Dow Jones Industrial Average is the story as people are watching that closely as I'm recording this show just past the midday mark, and we're seeing the Dow flirt with that 20,000 number. It has not crossed it yet. It got within 37 cents of it, incredible, and then backed off. And then this unfortunate news about a shooting in Fort Lauderdale Airport, where maybe it has taken the focus away from the stock market, and it seems like it stalled a bit. We're going to expect the Dow to cross the 20,000 number. It's probably a non-event, and then we'll see what happens. And our guess is that the market is going to have tougher going as it gets up past that level. The bond market, while when money was flowing into the dollar, money flowing out of the bonds, when you start to get acts like China did, then you get the dollar pulling back, and that kind of caused a reverse flow from where we had. So the bond market also got helped by the action in China. We saw a pretty big gain in there, but then Thursday was a good day. Friday, the bond market started to pull back again, but the 30-year gaining about 1 3/4 points for the week. So we'll call that a pretty good up week for the bond market at a time when the stock market is moving to the upside also. The gold market gets a bounce, we actually think that is temporary, and silver market bounces also not quite as strong. Gold up about $25, silver up about 50 cents, and both of them now have moved into a resistance area. So we're expecting that they're going to have a tougher go of it, gold and silver, on the upside coming into the coming days and weeks. The oil market, it really was a small week, a little bit up. That was a big reversal on Monday as it tried to get up early and then ended up big down. $3 range in there on Monday, which was really big. As talk started to come out of the producing nations actually cheating, well, it was pretty likely that's going to happen, and that their deal that they have to hold prices up or to limit production is likely to run into some trouble. So as the market continues to the upside, we're going to think that the nature of it is more like a shifting of holdings and maneuvering and thrashing than it is really a healthy rotation right now. The Dow getting up to 20,000, the S&P nearing our targets up around 2290 to 2300. We had an intermediate target of 5,025 on the Nasdaq. That's crossed the 5,000 number today, and all of those getting up into some pretty good areas where the market is likely to start to run into more trouble. You know, healthy markets don't really see big sectors having big declines, like the Russell falling 20-something points fast on Thursday, and the big declines that we're seeing in the retail stocks. So that's why we're cautioning now that we start to get a sense for a market becoming less healthy and maybe having a rougher time making the upside ground, and especially once 20,000 is in the bank, then maybe the focus will get off of that. The risk is that, early in the year there could be some disappointments. There's still a lot of work that Trump has to do to get his cabinet passed through Congress, and there are no shovel-ready programs, and all the stimulus that they are anticipating still has to go through Congress in a lot of ways. There's going to be even Republicans that push hard against that, and the people on the left are lining up in a big way, and we really expect to see a lot of noise out there when it comes to acceptance of Donald Trump's policies, and that potential for some social unrest and the potential for the liberals or Democrats really being able to hold some ground, and the time that it might take to get policies passed as far as an actual tax law, actually getting money to come back to repatriate it into the United States, and putting on a budget that makes some sense. There is so much stuff here that needs to take a lot of time that I think the market's going to get very, very impatient, disappointed, and realize that they might have priced in way too much, way too fast, and that could be some trouble. Our educated guess, based on all of that, is before inauguration, which is just some 2 weeks away, that volatility is going to pick up in a big way. And by spring, after the stock market has had a very sizable correction to the downside, analysts are going to be saying something like, wow, I didn't see that coming. But we do actually see something like that coming. Let's switch over as we look at our 60-minute chart, where we could see what actually happened this week in the stock market. And here is the 60-minute chart of the S&P 500. And you can see in here, well, we had a 4-day week, right? As the markets started off the week on the upside overnight, and then we had kind of a volatile Monday, as you can see, as the market opened higher, that you can see right there. But then oil had this giant reversal, and it dragged stocks down in there pretty far to the downside. $3 range, as I said. The dollar had a big up day, and the S&P was up 25 and actually fell to only up a few points, and then finished the day up 16. So it was a pretty wide, choppy market that we saw in there. Tuesday, the markets were, well, actually, that was Tuesday, right? This is Wednesday. I'm losing my counts of the day. Wednesday, the markets were pretty steadily to the upside. As Eurozone inflation came out much stronger. Germany up the strongest like in 3 years. FOMC minutes come out on Wednesday. They talked about risk of faster increases in 2017. And these Fed heads, listening to some of them even on Friday, are getting more and more hawkish. That probably helped the bonds to move down on Friday. And they talked about the unknowns of Donald Trump. Well, we all know that there are unknowns. Thursday, the dollar took a big hit and the yen moved up pretty strongly. That started this kind of reverse flow, and retail stocks really were bad. They took it big on the downside. And China really did early on move markets, and we saw a break in there. But then, as seems to happen every day, the market moved back up to the upside. And this was a big NASDAQ move to the upside, as is happening here also on Friday. Friday, the payrolls come out. The U3 is at 4.7%. That's a 1/10 uptick. Payrolls were up 156,000. That was in line with expectations. But wage growth was the biggest since '09. So now we're starting to get the sense of some wage inflation coming in there. And that does make sense, doesn't it? And, as the economy gets a little bit better and as the workforce is, diminished and demand for workers increase, well, supply and demand says that's going to pick up. And that also is not very good for the bond market. Dollar gets a rebound, gold pulls back, and the U.S. stocks gain and hover around this 20,000 area. They're really close. The question is, are they going to be able to continue? And that is a question whether or not even closing through 20,000 matters, and whether or not the market pulls back from there. And my guess is that it will. Let's take a look at the calendar for the coming week. And earnings reports are just going to start to come out. We have one after the close, KB Home on Wednesday, and then we have the earnings reports on Friday before the opening. You could see they're all banks: Bank of America, JP Morgan, PNC Bank, and Wells Fargo. Economic events, if there's anything big, on Thursday, there's a lot of Fed speak. There's 3 or 4 of them, and that's going to be capped off with Janet Yellen speaking to educators in a town hall meeting. So who knows what kind of questions are going to come, but that, of course, could be a market mover. We don't see a lot more in there in the way of potential market movers for the week. So that is a look at the earnings and economic calendar for the week. We're going to jump right in now as we look at our best and worst stocks for this week, as we got some pretty good movers. The upside on this strong week was better than the downside. There wasn't, of course, not many downside movers outside of the retail category. The biggest mover of the week, and we'll show that to you right now, was NE, Noble Corp. That was a big gainer in there, picking up over 15% on the week. This is, analysts have upgraded this one, and it was basically a depressed bounce that we saw in there, as it gets a decent uptick in there. We're going to say that this is still in a downtrend, and we would be surprised to see a lot of upside potential in this one outside of this kind of channel that you could see it's in there on the downside. So we're kind of looking for it to stall in here. Noble Corp gets a good bounce. Neighbor in the same group, NBR, this one is worthy of showing. I've showed this one before, as it made a beautiful inverted head and shoulders pattern that you can see right in here on this big pattern. It took like a year to form, and then broke out. And here was the head and shoulder measurement right here, and you could see this week it's moved up past it. Now we're getting into a corrective period right here, and we think that it is going to give back some ground in here after this big up week in there in Noble Corp. As far as other drillers go, RIG, that moves up about 6%. That's Transocean. There's an inverted head and shoulders in there also. Our upside target in that one is at around 1750. So now we talked a lot about the retail, and I'm going to show you some of those in the worst of the week. SHLD was one of the biggest movers to the upside in the week. This stock has gained because they are selling off assets. And what's good about selling off assets? Well, they're raising money, and the fear was that they were going to, based on their burn, they were going to run out of money and be in huge trouble. They sold off Craftsman, which is a pretty good sale, and they're selling off real estate, which they've done before. So what are they doing? I mean, they're essentially cutting off their arms and legs to get more blood to the body, and that's just a suicide mission when companies do that, and they have been just in horrible shape. Their stores are just awful, and well, the Sears stores are still good, of course, decent, but the Kmart stores are pretty awful. And this stock, as you can see, moving down this channel, and we believe it's heading under 7 and eventually under 5. And based on this pattern, we think in the next couple of months it could see a lot more downside in there. So we're not liking this one at all. There was also strength in the materials sector and the precious metals sector. Not huge gains in there, but the dollar weakness the last couple days did help. FCX, we'll take a look at that one, and you can see it's got a rise in here, and see the big inverted head and shoulders. Our target is up here around 23 or 24 sometime this year. You could see though that our intermediate the intermediate trend in here is suggestive of pulling back. These patterns that you see in here, in fact, these nested bottoms right there, that's copper, and that's the base metals. The DBB is the blue one, and then the black one is FCX, and we're in this corrective mode. So we actually don't think that there's going to be any real upside in here until we get past late March or April, and that this will likely continue to be in a choppy downward corrective motion. Now, PAAS, we have these stocks on our best for the year. 3 of the gold and silver stocks and GDX on our list of best for the year. And this one was the best of the silver patterns, and you can see it held from breaking down and then moved up. But it comes up to a resistance zone, up about 6% on the week, and at resistance. And this is another example of what we're looking at for a corrective period here into March, April, and then moving up again. Man, we think that if we get these declines as expected into March, there's going to be some beautiful buying opportunities at that time. So the tech stocks had some pretty good moves this week, as in fact even unusual moves, as they have been the laggards, and then as institutions decided that the market was moving through 20,000, and they are so extraordinarily bullish. Man, I don't remember the last time hearing so many people be bullish, talking about all of the great things that Donald Trump will be bringing as far as stimulus goes, and boy, does that set up some disappointment when you hear that. So there's been just an enormous amount of bullishness, and when institutions run out of stuff to buy, with the Russell falling off as it is and really looking weaker, and most of these things having been quite overbought in big moves, they start to look at the laggards, which have been like the FANG stocks, right? And they're coming after them this week in a big way. So let's just take a look at a couple of these, and you can get an idea where they are. Now, we have been looking at areas to be short in these, and admittedly a little premature on some of the on a couple setups that we put in there, because they really stormed higher during the week. Here you could see though no, when we put these little blue notes in here, we put these in here for our chart subscribers so that they can see this rising phase right in here. Look at it compared to these other rising phases. Big upward spike in here, big 5-week move in here, and here just moving sideways and just now getting up to this intermediate resistance. Even the look of a big top and head and shoulders forming right in here, right? So we think that this is just some, late buyers coming in and chasing Facebook, and that ultimately this is a big top being formed in here, and it's likely to move to the downside, but up over 5% on the week, as it's up 2.5% for the day on Friday, and strong gains definitely in there. Take a look here. We're going to take a look at the daily chart just so you get an idea of this, and you can see our cyclical patterns that are in here, and this, as we showed you on the weekly, is a pretty key area. Normally the 89-day moving average is important. You could see it plunge through it right here, and then when it tried to rally, it couldn't get back up through it. Now, so you're at this short term and the intermediate term 50% Fibonacci retracement, the 89-day moving average. It's gotten through that minor resistance easily that we had in there, but now it's getting into tougher resistance areas. So anything can happen. We believe that the probabilities are high that this is the zone it's going to fail in, and that's why we believe that the NASDAQ could run out of gas actually pretty quickly in here as it gets up to our Fibonacci projections up at around 50.25. So take a look at Netflix, another one we'll look at that gains 5% on the week, as we'll switch over to the weekly chart for you to see. And this is an important area for this one also. As you can see, here's the past high right over here, and it gets up pretty close to that right now. This time it failed. Overall, the big pattern is pushing up and the small pattern is pushing up. We have seen that, and we expected that, and we've gotten that nice gain. Actually, when we look at our daily chart, we actually missed this trade. RV and I were talking about alongside setup as this declining period ended and this rising period began right at the support zone. I admit to missing this one, and right now you can see it's actually not gaining on this day. So you have that doji right there, and that is a sign that this stock is actually stalling already. So that's a look at Netflix. The last one we'll look at it would be Amazon in this category. Netflix up 5%, AMZN up almost 4% on the week. And this one, you can see a very similar occurrence here on this weekly pattern. As the NASDAQ goes to new highs, and you see stocks like Netflix going up and testing the high, Amazon's a long way from it. Valuations in here are just nutty, and yeah, they're the killer. They're the ones killing retail. And at the same time, when you look at the massive valuation in here, you got to wonder, is it going to be able to put on a big gain? So here, the same thing. Rising zone, big rise, rising zone, big rise. You could see that rising zone. Well, it has struggled. It has not been able to get to a new high, and that's why we're suggesting that this one is going to roll over and fall off into this May period right over here. So lots of people talking about bullishness here in Amazon, and we are not happy looking at that pattern, thinking that there is risk that it's going to fail. So big gains in this category for the week, and big important area for that. Now, we've talked about China really starting to wanting to stop the decline of the yuan and taking some pretty strong action. That has helped a couple of or a lot of Chinese stocks and stocks related to China. Let's just look at a couple of them because they are actually in some pretty favorable patterns. We were looking for a low in Baba, which is the Alibaba group. As you can see, the declining phase ends, brings a rally. Declining phase ends and brings a rally. Declining phase ends and brings a rally. So you want to have these charts on your TOS platform. All you have to do is become a level 4 member. So here you could see the rally beginning right in here, coming up to this resistance zone. probabilities based on this stair-step upward movement we're seeing is that it's going to get through that zone. So it would look like that would be the first place for it to stall, but we also think that if there were a pullback, it really should be bought. So that's a look at BABA. BIDU is the next one we're going to look at, and that is the similar pattern, right? You could see we wouldn't be surprised to see it trade up to that 197 area at the top of that sideways channel going on, as it is also in a rising zone and coming out of this time period right in here that we had anticipated a bottom, and then it moves up in there pretty nicely. So we think if Baidu pulls back, you could get a pretty good move in there also. One more stock we'll look at in here. Amgen gets a good bounce as they get a favorable judge ruling regarding a patent case with Regeneron, and this is really interesting because for our chart subscribers, and I had mentioned this before, every one of these rallies in these rising periods, no matter how far away it is from the 34-week moving average, that's the blue line, it comes up and crosses it. And you can see that as this week it has this big move from 148 to 160 and comes up and touches that line. We don't think it's a bullish stock, actually, and you can see this declining configuration right in here. Odds are it will fail at resistance and then be moving to the downside again. So a big week in there, up about 6% for the week in Amgen, but we think it is likely to fail. So now let's talk about the worst stocks for the week. Well, not much to talk about, actually, as we see that there has been an up week, and really the retail stocks have taken the worst of it in here. So let's take a look at just a couple of them. Now, for our members, you can go in and look at our stock sectors video on Thursday, and we did a review of 26 retail stocks. Pretty deep review, and I think a lot of good information in there where we broke it down between the stocks that we consider to be broken stocks, the stocks that we consider to be risky stocks, and the stocks that we thought were okay or good. So I think it's a very informative video, and if you're interested in the retail category or learning more about our cycle analysis, I suggest you go in there. I'll talk about a special way that you can do that in just a couple of moments. So let's take a look here as we switch over to Kohl's, KSS. And there you could see a stock that moved up tremendously off of an inverted shoulder, head and shoulders bottom. Left shoulder, head, right shoulder, measures to here, an incredible near touch of the measurement, and then rolls over. This low comes right on time. You can see that. Here's the low here. Here's the low here. Here's the low right over here. It's a little bit off. You can see that. And then this decline has another month in it. And then we think a fake rally and then down again. So this is really a horrible broken pattern in here. And this was on our list of stocks, of course, with broken patterns. This one down 16% on the week as it gets annihilated on Thursday. Take a look at Macy's, and almost the identical pattern. This one down 14% on the week as it looks pretty horrible also. Also in this category, Dillard's was down 9% on the week. JCPenney, which we think is going to be a $2 stock. You'll hear me say that almost every time I say JCPenney. JCPenney and $2 goes together for me. So that one down about 7% on the week, and JWN is down about 5% on the week. Basically, the retail had a very rough time of it. One more stock that I want to show you that had earnings and an interesting pattern is Schnitzer Steel. Now, the steel stocks basically up on the week. SCHN, they missed a little bit on earnings as they had about a 5-cent loss on earnings. It's pretty hard for these steel stocks to make money, but the steel price is still very depressed. Yeah, they've had a bounce, but they're like 70-something% off their highs, and that is significant. And China, which was a dumper, they're trying to hold it. So that helped the steel. They're trying to keep the production from increasing in steel. So that's helped the group also. But Schnitzer had a pullback. And here we're talking about the worst of the week. And I'm going to tell you something about what I think is one of the best opportunities here. And we have this big break that you can see right here. This is probably the worst of the steel stocks that we're looking at. Note the upward stair-step pattern in here that matches these cycle rhythms and the low due right here on this week. You could see that. This blue line is the DBB, so it's out of phase with the DBB, but that's also in a rally phase. So that says to me that this pullback in here has a high probability of getting a pretty good rebound. Forget values. You can't talk about valuations when you're talking about a bullish stock like Amazon, right? So here I want you to see the importance of the 89-day moving average. I showed you that decline right to the cycle expected cycle low. Now you've got negative momentum right in here, and it's pushing down, coming right down here to the 89 day. So what we want to see in here is that this begins to hold right over here, as it did over here. You can see that. It turned negative here and then turned positive. We'd like to see that happen right in here, and then you'll know that Schnitzer is making the important bottom in the area that we are talking about. So that is a look at the worst of the week. So now let's talk about the short-term view for the stock market as we move into this period of 20,000 Dow and what's going to happen in the next week. But before I do that, I just want to remind you that we have changed a little bit and that we've expanded our short-term view for members, whereas we cover 5 major markets. We look at not only the projection for the coming week, we also look at momentum and the daily momentum, and then we look at the intraday momentums and compare 4 different indexes or 4 different currencies or 4 different metal stocks and be able to tell really where the relative strength is and momentum in each of those. It's a very expanded view, and I've got rave reviews from our members about it, and they based on what they're saying, I think you will love it. You want to see what that looks like, or you want to see our other 200 plus videos, if you just write to me at slim@askSlim.com, I'm gonna send you a link for a half price for a month. That would be $16.50 for all of that I just talked about, that you'll be able to view for 1 month. That'll give you 4 of our expanded short-term views and our Future Speak on Wednesday and all of our other videos that you can learn from, and there are 9 different categories. $16.50 for 1 month. Come on, how can you afford not to do that? So send me an email, slim@askSlim.com. I'll send you the link. You'll be a level 2 member and get all of those great videos. So now let's talk about this stock market, which has been moving up significantly, and this Dow flirting with Dow 20,000. We had anticipated that this would be a dip and a rip week. We thought it would dip early and then get a rip to the upside and then get up to our targets, 2290 to 2300. We got a dip and rip. The dip was only on Monday morning, and the rip has been really for the last 4 days. Actually, it was Tuesday morning. I keep forgetting that Monday was closed. So it followed exactly. As a matter of fact, we're about 80% this week on all of our other markets also. So it was a really good week for the short-term analysis. We're going to take a look at this right now as you see this move to the upside. Our upside projection 2290. You can see 2282.1 was the high up there. And here's what we're really looking at right now. So this has been a very powerful 9-day pattern, making up these 18, 19-day patterns right in here. So we knew that we had 2 of them rising in here, and we were hoping that the new year shenanigans, changing of the way the money moves around didn't affect it by much, and it didn't. We stayed in the positive momentum through this entire period right in here, and we got the exact move to the upside that we expected, and that brought us up to this level. So this 9-day repeating pattern that we're looking at is going to move into a corrective period in here. So what we're really looking for is some pullback. Maybe you get up a little bit more and then pull back for a few days right here. That's going to give us a modest downside week is what we see for the next week, and the beginning of a topping. 20,000 on the Dow is meaningless to us. We'll probably get a close above it, maybe go a little bit above it. But then what we think is that this pattern comes, and then you start to get some bigger declines. Inauguration is right over here on the 20th. I think the market is declining into inauguration, with people anticipating there's a decline afterwards. And overall, this whole period that we're in becomes a big topping period that I think we're in. So that's kind of a little bigger picture. We're going to call a modest down week on the market. Last week we said the VIX would move down, and it did, sub 11. We think that it'll move sub 11 again this week and coming week early, but then start to gain. And we think the VIX has got a pretty good opportunity to move to the area of about 14.5 to 16 pretty soon, maybe sometime around the inauguration period. So we're looking for a big uptick in implied volatility. All right, that's it. We covered it all. I hope there's been great information for you throughout the show. You have any questions, you can write me an email. If you have any questions about membership, you can write support@askSlim.com, and they will help you with membership. Don't miss this opportunity for a month to look at all our videos for half price. I think it's great for you. I hope this is a great week for you. You remain safe and healthy, and we're always wishing you great trading.
Well, I'm going to